Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode brought to you by Johnson & Johnson, makers of the Trudy probe for the surgical treatment of chronic sinusitis. Since adopting an AI-based navigation system, we have successfully increased adverse events by 10x. Happy customers are raving about the AI-powered tool with inadvertent benefits, including cerebrospinal fluid leaking from the nose and stroke from major artery injury. Surgeons are raving about the AI-powered navigation system, saying, "I was misinformed about the location of my instrument while inside the patient's head. And I was not trying to puncture the base of my patient's skull." Researchers at Johns Hopkins gush over the AI revolution in medicine, stating, "AI-enhanced FDA-approved tools lead to a doubling of the recall rate within 1 year." Johnson & Johnson, what if WebMD could accidentally drill a hole in your brain? And finally, by GammaStrike.com, providing actual real-time data for every type of trader. We've tried the rest. Now try the best. GammaStrike.com. I'm Jay Fresh, and I am not joined this week by co-hosts Gherkin and Dork. I believe Gherkin has been taken by ICE because although he is Italian-American, he does look Persian. And Dork is sick, he claims. So tonight, I am joined by producer Ron, who I
Hey
am
there.
told, hey Ron, who I am told this is not his first time, but it's his first time with me, and that still counts. All right, let's get into the market overview. How
Yeah,
you doing,
no,
Ron? How you
talking with
feeling? You ready? You ready for your big breakout?
I'm ready. I mean, you guys have been shitting on me all the time, so I think it's about time I start throwing some shit back at you guys. So
I
I'm
think
ready
that's
for it.
probably fair. Yeah.
Yeah.
All right. Well, I have so many windows open that I've actually lost the window of the document that you sent me. So give me a second. Why don't you
I
tee
can
me
cue
up
us
since you're the
up.
producer? You
Yeah.
can just literally just tee me up with the topic to discuss, which I believe is AI related because you love
Oh,
me.
yeah. I mean, you know us. At this point, we have to talk about AI. Otherwise, it's not a real episode, right? So,
Well, yeah.
so
Unfortunately, it is impossible to not talk about AI in literally anything these days, and I think everybody's just sick of it. So we're going to talk about it.
yeah. So specifically, let's talk about tech volatility. This past week, we saw a lot of kind of up, down, back up again today, right? It's Monday that we're recording this, but then also at the very least, I think there's some concern about AI disillusionment actually starting to hit investors. And
Y-
let's talk about that.
Yeah, I don't know if it is disillusionment quite yet, but I think
Hmm.
it is indigestion. And I'll say a lot of the indigestion stems from what, we've been talking about for the last few weeks. As all of the hyperscalers have blown through all of their free cash, they're now issuing debt. And actually today, Google issued a significant amount of debt. I think it was like 15 billion or something in USD denominated bills. I think some of them were 100-year bonds, which everyone was kind of
Wow.
off about online. I'm not a huge. I don't profess to know a ton about the intricacies of the corporate bond market. I have seen. I know Andy Constant is a big name on X. He's spent a career dealing with a lot of these things, and he kind of says it was a bit of a nothing burger. So I think the challenge there with the bonds is that it was oversubscribed. So even though the bonds were 15 billion, they were oversubscribed to like the tune of 100 billion. But what Andy was saying was that, well, yeah, they're going to be oversubscribed because they were selling the bonds way below the rate of the existing bond curve for Google. So they put out such a delicious cherry. So I don't know what to make of it. I mean, it's like on the one hand, why would Google underprice their bonds so much to try to get people in? And on the other hand, why are they able to do that? Like, are they just super confident? Are they super nervous? I don't really know. Um, Speaking of super confident and super nervous, we are
Ooh,
actually joined by Girk.
Oh,
We are
hey.
going to keep Ron in the primary roundup here, though. He will replace Dork forever. Dork is dead to me now.
That's pretty
Welcome in.
reasonable.
Better late than never, or just worse than never? I don't know. We'll find out. Do you have anything to say about Google issuing its bonds today? Because
It's 20 billion, right?
it was like 15 or something like that, and it was oversubscribed to like 100 billion. But I've been told, I've read that it, of course, was going to be oversubscribed because they underpriced it all to make sure that they got plenty of demand.
How much did they ultimately issue?
I'm sure they issued 15. I don't know.
Okay.
But they have to issue a lot more, right? Because all of the hyperscalers are saying they're going to issue, 100 to 200 billion dollars this year. And that's part of I think the indigestion overall on these bonds is because we have now approached a point in time where the meme 7 is no longer a profitable cohort. Well, projected to be profitable in 2026. They are now projected as a cohort to spend more on capex than they will obtain free cash flow, and so, or net income. And so I think anybody, the criticism of the provocative statement that I just said was, well, that's capex, that is an investment in the future, they will depreciate that over time as they get more revenues. But hear me out. What if this is all a big billionaire pissing contest to try to either maintain or to gain a future monopoly in just search-based technology in general? And the reason that everybody's spending all of this money is because they're all saying, I'm not giving up. You are going to die. I'm going to do whatever it takes. You can't outlast me. It's a big game of chicken. And Google today is saying, putting down their foot and saying, like, I'm going to be the winner here. You all need to give up because here I am issuing a shitload of debt right now, not waiting another day. I'm just going to go ahead and get started. Catch me if you can, or give up so I can stop doing it, because none of this is going to make anywhere near the amount of money that the capex we're putting in would indicate. So if the capex isn't going to return things and the capex is just perpetually growing, maybe it's really opex. And if it's opex, they're no longer profitable.
Now, as a question here too, have any of the other Mag 7s issued any debt as well?
After earnings, I don't know, as of like this last week or two. I think it's just Google, but they all are planning on issuing a shitload of debt.
Okay, so Alphabet's kind of cutting everybody off by getting to it first.
I mean,
Well,
Oracle's issuing debt like crazy.
okay. They don't count. They're not in the meme 7.
They're close.
Yeah,
They're
they're
definitely
making
worth a
it on the
lot more
charts
than
that are
any of
going
the
around
Mag
there.
7 were worth when all this bullshit started.
Yeah, I think their free cash flow is like 20 billion a year, and they're gonna do like 50 billion a year in capital raise. Although, yeah, I think it's going to be more than that because their obligations. I think it was something like they've raised like 90 or 100 billion so far, but they need like 180 to build all of the uh all of the gigawatts of power that they've promised to people, mostly to OpenAI, and so they're going to need like another $80 billion. So I don't see how they're only going to issue 50, but we'll see.
Well, the good part is after the Super Bowl last night, there was definitely a lot of AI ads to kind of help encourage us all to love AI, right?
Yeah, which Ron, which one resonated most with you? As our resident moron. No, sorry, I can't be mean to you while you're able to respond to me.
Yeah.
Which one did you drool at and be like, that is really, really cool?
I don't know. I mean, to be honest with you, I felt like I've been disappointed by a lot of like Super Bowl ads. Like, I don't know. Like a few years back, there used to be a lot more where you're like, oh, that was really good. And like, you'd really I feel like a lot of these are just kind of, okay, that wasn't bad, but you're not like, oh, that was amazing. I loved it. I don't know. What did you guys think?
I'm going to let you go, Girk, because you have your mouth full of food, which is
I
the.
I haven't eaten any dinner. I've had a wild night. I don't watch sports ball, so I'm not sure what happened. I missed Clanchella, and I was really looking forward to watching 50-year-old what's his face sing bow with a wow to bang ditty or whatever it was. I don't remember. Or was that Limp Bizkit?
I think so.
Somebody ate a cracker
No,
coated cum. I don't know who it
no,
was,
bow
but
chicka wow to bang. That was him.
that
Yeah.
was him. That was him. Yeah, nothing reminds me of drinking beer while jet skiing on a lake in Michigan more than Kid Rock.
Yeah, here's my
And then a
question.
nice round of meth.
Did you notice that the Super Bowl, one of the big sponsors of the Super Bowl, as usual, is Budweiser? Did Kid
Are they
Rock?
trying to reclaim their base?
I don't know. I didn't watch the Kid Rock special. Did he shoot more cases of Bud Light?
I think, if I remember correctly, he got over that. I think the official story there was somebody from Anheuser-Busch actually did go out with him, and they were like, all right, hey, we learned our lesson or whatever. And I think Kid Rock's been like, well, okay, I think I've moved on from that. It's not bad to buy their beer anymore,
I see.
I think.
Was
I'll
it
have to
bad
double
to
check
buy
that.
their beer? I mean,
Yeah,
besides their
they
beer
were.
just being bad.
Yeah, it's bad.
Yeah.
But they were trans positive for a brief moment in time,
Yep.
and Kid Rock took a machine gun to actual Bud Light cases.
So
'Cause it angered him so
after
much.
what 200 years of catering to the lowest common denominator of hick, they showed one moment of slight social understanding, and that's what turned the base.
I don't know. Now have we, Ron? You got the numbers? Have we lost all of our viewers now?
We never had
No
any
more,
to begin with. This shit's
no more than
pre-recorded.
usual at this point. I think we're doing okay.
Okay, so still at 0.
Yeah. Yeah.
All right. Okay, but the AI ads in particular.
Yeah.
I didn't see any. I don't. I don't. I really don't watch the Super Bowl.
I
think
will say, well, Ron, I'll go first since you're not even supposed to be here, and then I'll let you talk.
I was trading
I will.
futures.
Well, okay, that's actually a great point because I was watching the Super Bowl kind of like how everybody under the age of 40 watches everything now, kind of half involved, right? You're kind of looking at your phone, you're kind of dealing with your family, you're kind of watching the TV. Attention is hard to grab nowadays. Like it I think part of the allure of the Super Bowl a long time ago was like it was the event. Like it was on. That was the only thing to watch, right? Everybody else played actual garbage because nobody wanted to compete with the Super Bowl. But now you don't have that timing issue. Anybody can watch whatever they want at any moment. And so you have this attention problem. And so the Super Bowl is trying to compete with everything that's ever happened ever in the history of the world instead of just what's happening right now. And so everybody under the age of 40 is only kind of half paying attention. And I think that that is just it's not a criticism. It's just a natural evolution of just media today. And for example, with like OpenAI's ad, it was so disconnected from AI at all, or like a concept or an idea that I could follow. I remember, by the end of the Super Bowl, I was like, I don't remember seeing an AI ad for OpenAI, and so I looked it up online to see what it was, and I realized at that point that I had watched 90% of the ad, literally stared at it. But I looked away at just the wrong moments that I never actually associated it with AI at all or with OpenAI at all. And I think that most of the AI and tech ads had that issue is that they didn't capture your attention and they didn't make it clear what the fuck was going on.
Yeah. I think that was kind of my problem is, and I'm not even sure if that's just a recency thing where it was like, well, nothing really stuck. Um, Even like the ads that I think, like you were saying, where it's like, okay, hey, this should be a pretty straightforward. Here's OpenAI. I think they were so kind of ambiguous. Just here's some positive slop that it just didn't really resonate for me.
Well, yeah, but the thing is, it didn't even make sense. It wasn't even slop because
Mm.
if you go back and watch it, it's a bunch of humans building things and then saying you can just build things. So
But I
the
almost feel
message
like,
is humans can just build things. You don't need AI? I'm not really sure what
yeah,
exactly the message was there because it was just a string of historical times where humans actually built things. I don't know. I didn't get it. The other one was like, I guess the Claude, the Anthropic,
yeah.
the Claude AI, those actually seem to flop with viewers. They did some surveying and it was in like the bottom 3%
Oh
of
wow.
like all of the commercials that have aired in the past 5 years. Now keep in mind a lot of the ranking is in, is it going to drive you to buy the product? So
Mm,
it's a question of like, did the message just not land, or does nobody understand what the fuck you're supposed to spend money on AI for? Because all of the AI, the Anthropic ads were on like, oh, ads are coming to OpenAI,
yeah.
not to us. But at no point have any of these AI people actually done a good job of explaining to the general public of like what the fuck it's for, other than like making stupid pictures and cheating on essay writing mid essays that nobody wants to read.
Hmm.
Like I don't know. It's just more confusion. I think one of the uh, I really don't know what to make of it because it just none of it really made sense. I will say I want to bring in some crypto a little bit here because I think probably the most controversial ad of the night
Was
was
Coinbase?
the yep, was the Coinbase
Yeah.
ad.
What
And
was
I'll
so
tell you,
controversial about that?
well, because the whole ad was basically just a unlabeled sing along
Karaoke.
to
Were they
rock
talking
your
about making
body.
assets better?
No.
Oh,
And that was
No,
kind of the problem.
Backstreet's back. Backstreet, rock your body,
Yeah, and it was really
everybody.
poorly animated, like what you'd expect out of like a, I
AI
don't know,
slop.
a
No.
bad
It wasn't
karaoke bar from like
bad
2000
karaoke
or
bar, but
something.
just like imagine if you gave a 10-year-old access to PowerPoint and you taught them how to change the colors on everything and how to do the animations.
Yeah, just
And
to
you
fly
asked
in.
them,
That was it.
yeah, fly in, like, yeah, rotate, like all the just a PowerPoint from 1995 made by a 10-year-old.
Yeah, I remember
Um,
watching it thinking
and
there was
then at
something
the
wrong. And then
right,
no, it was a legit Coinbase ad.
and then at the very end, it just put up Coinbase, cryptos for everybody, or
Yep.
something like that. And the reaction from pretty much from my own household mirrored the reaction of the earth, which was just like at the, we all enjoyed singing this stupid song, which has transcended generations. My kids know this song. I never have played it for them. And at the end, we're all just like, oh, what? Ugh. Like, oh, come on. Like, it's like we just got rug pulled, which
Yeah.
is so crypto. Get us all excited and then just rug pull us. I actually, my own brain thought because the colors at the beginning were like a very strong blue and yellow, I thought it was like Blockbusters coming back. Because like in my head, it's just like, oh, you would play a song like, hey, we're back. Like it would make sense. It was like, is Blockbuster getting into streaming? Like, is somebody buy the rights? And my head was just like spinning. And then I got to like Coinbase and nothing made sense. And I was
Uh,
just disgusted.
So I thought it was going to turn into something with T-Mobile because like I think they had done the other boy band earlier ad, and I thought, they're going to
Yeah,
do something with that.
yeah. There was another ad that just played, the same song. Yeah.
Yeah. And I thought, oh, it's going to be a T-Mobile. Nope. Coinbase. And
Just
yeah, I was left with the
very,
same thing. Like, here you go, Coinbase. And you're like, what were you trying to sell me there?
yeah.
Like, here's
I wrote,
nostalgia. Have a nice day. I don't know.
I'm really proud of this one. I wrote a nice zinger because they responded because everybody hated it. And they responded with like, well, now you're all talking about it. So mission accomplished. And I just responded with like, yeah, well, everybody's also talking about Jeffrey Epstein. So what exactly was your goal here?
Ooh.
No, no comment on that one. But yeah, so I think, yes, to put it all together in terms of AI and the general public has always been confused about what the value proposition is for this. They're starting to get more indigestion because everybody, now including the hyperscalers, are starting to put out their hands and say, give us your money so that we can keep doing this thing that nobody really understands why we're doing. And so it will be interesting to see. Yes, the Google thing was oversubscribed, but they underpriced it. So it's really hard to kind of parse from that what the actual demand is long term. I think it's something to continue watching. The other interesting thing from that is the SaaS bloodbath that's occurring. I do want to just say that nothing makes me feel more disgusting than kind of agreeing with Dan Ives, who is the jester of Wall Street. But I do think that the SaaS thesis that has caused the sell-off is a little bit overblown, in that the idea is that, okay, well, AI is going to write code for free. It's dropped the price of code for, 100 or 99%, 100x. So SaaS is going to get decimated because everyone's just going to write their own software, their own bespoke tools for every enterprise. I think that's complete horseshit.
Yeah. And I'd agree.
I think that everything that we have seen so far, right? It's like, this is part of why I did the introduction that Girk missed because he hates false stars. But this is why I put in the introduction, just like how this introduction
I didn't know
of, I was
It was a
kidding.
good introduction.
The introduction was all about how introducing AI into some process, like a medical procedure, actually ended up making the outcomes worse because it lowered everybody's ability to actually understand and know what the fuck was going on. They had a decent idea, but it wasn't good enough. So they ended up, accidentally, my little probe's in your brain now. I actually went through your skull. Sorry. The thing didn't tell me I was in your skull. I was close to it, but I was in it. I went into your artery there, and now you had a stroke from your, outpatient sinus surgery. And this is what's happening to code as well. Like, it's not unique. We're replacing deterministic, causal, logical structures with, statistically randomized structures, right? And so we're going to introduce more uncertainty in the outcomes of what these programs are providing. And so everybody just looks at like, oh, Microsoft is shitting the bed. They're hiring or appointing a czar of quality and trying to figure out how to prevent all of these bugs proliferating in the updates which have been happening. I mean, my own personal experience, the new Outlook is broken. Excel, many of the functions that I've used for 20 years now, because I'm getting to be an old fuck, are broken. They haven't been broken for 20 years and haven't changed. Why are they broken? You look at all of the vulnerabilities that are occurring in all of these platforms because they're vibe coding things, and the vibe coding isn't taking into account security. Everybody look on the outside looking in sees programming and code and software getting worse. while all of the people on the inside are going through their own AI psychosis saying everything is so much better. What they're really saying is they're having a lot more fun because they're all in psychosis. And
I mean,
so
I
I
think,
agree with Dan Ives in the sense that the sell-off is overblown. We still need people who are going to write logical software programs that work. And this is not a replacement for that.
yeah,
But I disagree with him in the sense that everything's still way overvalued. Like there's still too much exposure to stocks across the board.
yeah. I mean, I think to that point, like, I think one of the early applications for AI was to say, hey, you know what? I don't know. Like, I like John Steinbeck. Let's just create 5,000 John Steinbeck stylized novels, right? Where you feed the AI, here's a bunch of books, go ahead, reproduce, write what would be in that style. And I think like that's kind of the thing with software too, is that sure, you can have it code, but that doesn't necessarily mean that it's good. There's a lot of, just because you can have it being done, that you still have to go back in and do the work to make sure that as far as security, as far as functionality, that it really is optimized to the way that you need to. And so I think, sure, if everybody wants to create apps, it's not necessarily a bad thing, but that doesn't necessarily mean that it's going to be quality or useful to the point where anybody's going to say, yeah, this is what I need. This is a viable business. Like I think there's been a few ads where it's like, yeah, hey, we created a time tracker app or something. Oh, that's awesome. I created an app too. And it's like, well, sure, maybe that's the thing that your business needed. But let's be real. I think that there's definitely still going to be the need for people to come up with solutions that really do meet enterprise needs. And yeah, the vibe coding aspect of it that you mentioned, sure, that's definitely a factor that I think is causing a lot of the issues too. But I don't think AI is going to be able to completely just shut everybody down either. I think we
Yeah, and
still need
I
people.
have always kind of maintained the opinion that AI is decent search for some of that stuff. So like let's say I kind of have an idea of how I want to implement something in a coding language that I know reasonably well. But it's also something I know that 100 million people have already written before and published online and discussed in forums and yada yada yada, just gone on and on and on, and or optimize some sorting mechanism that there's a, 1,000 people who spent their entire careers optimizing a specific sorting mechanism. I have no desire in rediscovering that, but I need it. But maybe I don't know how to implement it in Python or whatever language that I'm writing in. And I can just go to the AI and say like, "Hey, this is what I want to do," and it'll shit out something that's pretty close, if not verbatim from something it scraped from a forum or from GitHub or whatever. That's useful because it is like it's almost like bespoke package like incorporation into your system, right? Instead of going to like the pre-made packages, you can kind of go and pull packages, but you can't just pull the package and expect it to work. You have to make sure yourself that it is exactly what you want. And maybe it's 90% of the way there, but so in that perspective it can be helpful and it's basically a really high level autocomplete with errors. And from that perspective, I don't think anybody would argue with me on that at this point. But yeah, people trying to vibe code an entire SaaS platform, it's just not possible. I mean, this autocomplete just falls apart with any amount of complexity, right?
Yeah. Well, speaking of things starting to fall apart, let's transition to our next topic, which is the partial government shutdown.
I can't believe you
Are you
allowed
sure?
Ron to speak on the show.
I was
This
about to
is
say, are you trying
unfucking
to take my
believable.
job? Because my job is to make this podcast go on so long that no human being would ever want to listen to all of it.
I'm just trying
And
to
you
get us
just
under
did.
4 hours.
that was my job. Well, at least
And
we've
you
been
just
working
did.
towards the same
You
goal.
just did a perfect transition. I don't think I've ever delivered a transition with that grace and poise.
No, you definitely have. This was luck.
Oh,
First time
okay.
luck.
Well, now
Let's
you're
just
just
go with
trying to.
that.
Now you're just trying
Wow.
to survive. Oh yeah, your first time luck is as good as my best. Great, thanks. That makes me feel great. All right, Ron. The government shut down? I thought it was open. What's going on here?
So
There's another one?
Yeah, there's specific concerns that really about hitting airport security because this one is more of a partial compared with like the last one, with certainly more of a hit to the aviation industry is really where the people are concerned at this point about this one.
Okay, so this one was literally published just before lunch today. They're still fighting over reforms to immigration enforcement. I guess it was the last. How long was the last can kick for? Because the last closure was like for 4 days. It ended on Jan 3.
Mm-hmm.
Oh, it gave them 2 weeks of fun. Okay, great. It was 2 weeks of funding. So we're going to do this every 2 weeks. Okay.
Yeah, I think it's reading between the lines. It seems like it's a leverage aspect, and so I think that politicians realize they don't have the leverage that they did back last year, and there's a certain level of okay, let's just keep granting temporary continuations of things to keep things rolling.
Yeah, I agree. I mean, I think this is just more posturing and more of pretty milquetoast, middle of the road dysfunction in our government that's persisted for decades. I don't see this as like a market event, at least not yet. I think that's fair to say. Am I missing anything? I don't think
I
so.
think that's fair, but I think that there still is the impact to possibly hitting aviation if they can't get things eventually sorted out.
Yeah, but it'd be for a few days and then they'd figure it out, right? I mean, it's
Yeah.
all just like that. Like you said, they don't have the messaging or the leverage that they had before. And we kind of said that before at the last potential shutdown.
Well, and I think last time the big thing there as far as aviation had to do with the air traffic controllers, which
Does
Dirk did a
anybody
really good
does anybody care
explanation on.
about the TSA?
I
If
think
every
that's it.
I mean,
That's the crux of
Yeah,
if
it.
every TSA agent disappeared tomorrow, it would just be better.
true.
Can't disagree.
So, I mean, oh no.
Yeah, as anybody who's actually like traveled international in the last 20 years and like that first time where you start taking off your shoes and they're all just like, "What the fuck is wrong with you, you moron? Leave your shoes on. Why are you taking off your shoes at the airport? Your feet are disgusting."
I
And then you
mean,
come back here and you continue to be like harassed about taking your shoes off for 20 more years.
Yeah, it's
It's
like
like, why are we doing this?
yeah. I I get that this is a bit of a personal rat hole here, but I absolutely hate the airport experience. I don't even mind flying. I like flying. I just hate dealing with the TSA because that whole experience is just trash. It's like, oh, like you said, okay, now you're allowed to keep your shoes on. But a few
Yeah.
years ago, it's like, nope, you got to take that. You got to take your belt off. You got to take everything
Yeah.
else.
It's like, "Oh, take your shoes off. Your feet are disgusting. You didn't wear socks at the airport, you fucking trash." It's like, "Now take your belt off."
Yep.
"No, no, 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 no. You gotta go back in the machine now because your pants are sagging
Yep.
because you took your belt off and the machine can't read the shape of your penis because your pants are too saggy. Pull your pants up, but you can't hold them up. You have to keep your hands up in the air
You
like
got
you've
to do
got a
that
gun to
thing.
your back." Yeah,
Yep.
you've got a gun to your back so we can measure the exact shape of your penis. But don't worry, we're not looking at it and not storing it. We're just sending it directly to the Google AI training to be leaked in the next Moltbot vulnerability. But yeah, it's a trash experience. I agree. It makes no sense. It's just like, and then they like touch you and they're just like, "It's not rape if we use the back of our hand."
Back of the hand.
Yeah, back
Yeah.
of the hand is, yeah.
But
Just very weird. I
I
agree.
agree with Girk though. If you were to say, oh, less TSA folks, oh man, do I feel any bit unsafer flying? No, because I
No.
feel
Yeah,
like a
no.
lot of it really is theater.
You know what? You know what the
Pilot went
solution
to a
was?
community college, so I mean, I feel like you've got more significant concerns.
Well, you know what the solution was? Because all this started from the original sin of 9/11, but you know what the solution was that solved all of the problems that were made apparent in 9/11? They started locking the cockpit door before they took off. That was all we had to do.
Seems pretty straightforward.
But then we did all that other shit
The
because people are
Unabomber was
insane.
a genius, and he couldn't even figure out how to detonate a bomb at altitude. So I just I don't know what people are scared of. You think a guy with a fork is going to steal a plane again? It only happened once.
It's because we left the door unlocked.
Yeah, and now
Yeah.
everybody heard the Pittsburgh flight audio. We know what to do. You just tackle them, because one box cutter can really only hurt one person at a time. It's just not an effective weapon against 200 fucking other people. So you just dogpile the
Yeah.
guy, suffocate him to death with the mass of the crowd, and then the flight goes on in safety.
So I think it's safe to say that the official position of All Stars is we are pro government shutdown.
I'm pro the government not doing anything ever.
Fair.
Yeah.
All right. Let's
You don't want them to
transition.
buy. You don't want them to buy
Stop
your
trying to transition
mortgage-backed
us,
securities.
Ron. This
Yeah.
isn't
Sorry.
a Bud Light commercial.
Yeah. This is the banter that everybody loves that you're trying to kill, which is why we don't allow you up here.
Fair.
Stop trying to go to bed. Anyway, you ruined my mortgage-backed security joke. Go ahead. Precious metals, whatever.
Yeah, let's cut to precious metals though. So I think kind of coming into this recording tonight, I think the real question is we've seen precious metals obviously tank last week. It's kind of coming back up, or at least it seemed to have stabilized. What are your guys' thoughts as far as what's going on there?
They're dollar hedges. They're central bank dollar hedges. Some central banks don't have a lot of global access due to embargoes and various trade disputes between them and larger countries and the UN and things like that. So they buy silver, but everyone else buys the gold because everyone thinks our government is inept and think that dollar debasement is likely. Also, that we're probably lying about our economic numbers in a very obvious fashion,
What? Okay, here's
which would
my
mean that our
question for
dollar
that.
is mispriced.
I have two questions for you. The first one is not a serious one,
Yeah.
but is silver the AMC of gold?
Yes.
Okay. Next question. If everybody is losing faith in our bonds and our currency and our debt, why is the 30 years still under 5%?
Well, it's not that they're losing faith. They're just hedging.
Okay.
They're just hedging the potential loss of faith, which is now a
I see.
significant risk.
So this is step 1 of 2.
Yes. Remember the repatriation thing? How all of that money needs to go back to Japan because it's no longer got a positive carry in the US?
Yes.
So that's going to significantly devalue the US dollar because it's like $1.3 trillion that just goes whoop, gone. And even if it goes over a period of time, it's a constant grind against the dollar, which would actually probably be even worse than an immediate move of those assets. And they won't be immediate. It's broken up into different tranches and stages. But, you know, it does need to repatriate because and this changes global leverage, and global leverage is in the dollar, and if global leverage goes down, demand for the dollar goes down. And this is just an effect. This is not like speculative anymore. This isn't oh, I think this is going to happen. And not only is it happening, it is mechanically sound. Like this is what is happening, and this is how it will happen, and it is going to be a continuous process that occurs from now into the future. So this isn't like, and there's nothing anybody can do to stop it. It's just going to happen. And as that occurs, the dollar is going to inherently lose value, which means oil prices are going to go up, inflation is going to go up, global inflation is going to go up due to rising oil prices that are denominated in dollars, and dollar demand is going to decline. And as dollar demand declines, you're going to get more repatriation of more funds to other places, and global leverage will never work the same again. It is an end of an era. It's dying slowly, but it is coming to an end. Every portfolio in the world, and I mean every single fucking one, is balanced.
Including yours.
Yeah. Well, not anymore, but it is balanced with the idea, even if you're not, even if you have no idea, the assets you invest in, their portfolios and their holdings, those are all backed by the idea that free leverage can be gained in Japan on the carry trade, that Japan will finance the world's leverage at any given time. And they can no longer sustain that. Not that they don't want to, and not that they haven't tried as hard as they feasibly could to keep that going, but just, the markets are not going to allow it to continue, as their debt to GDP hits like 230%. And the US debt to GDP starts to falter, as well as our fiscal condition is now becoming worse, and then that effect is being realized. Prior to 2024, everybody talked about how S&P downgraded US debt. It was a constant point of banter for everybody in the bond market, like, oh, just one. But then we got both of the other ones came in and downgraded our debt. Our debt is not at the level that it was pre-financial crisis. It is not at the level it was pre-dot-com bubble or in the dot-com bubble. It is not at the level it was during the economic boom of the 90s. It's not at the level it was during the economic recovery of the 80s. It is now just slightly worse than it was, and it is not repriced. Yields at the end of the curve are where they were before the other 2/3 of rating agencies downgraded our debt, and now we're moving towards yet another downgrade, because that is the next step.
Yeah. Well, I guess the follow-up on that is, well, yes, our debt is worse, but isn't everybody else's debt also getting worse?
Is it, though?
I don't know. I'm asking you.
Well, I mean, theoretically, yeah. You tighten the curve by bringing the top down. The bottom gets slightly better, and the rest of everything slightly below the top kind of flattens a bit more. But I mean, no. I mean, there's just less speculative faith, and now there's going to be a loss of potential leverage in addition to that. And I'm not saying that we're going to lose reserve currency status, but we could. I think I
think that's that's probably like step 10 down the line.
I think Bill Gross is very
definitely
wrong about a lot of things, but as far as us moving towards a multipolar world in terms of economics and currency, I think it's absolutely correct.
Yeah.
I mean, we can't exist as the economy we are now without China's manufacturing base. And China can't become the economy we are now without creating separation between them and us. Because we're going to constantly put them into the role of a manufacturer, and that's not where they want to be. They want to be, a first world economy. They want to move into tech. They want to, and this is where they put their money. This is where they want their advancement. They want to be on par with the U.S. And there's no way that you can have the best of both of those. There has to be friction, and so and that is going to divide the global economy. And Trump's doing a really bad thing right now by imposing, tariffs and driving away our
Well,
trade
okay.
agreements and our stability that we have developed over a century of positive interactions with these allied countries. He's
I want to get
saying, fuck that shit. We can do
Yeah,
it
I
all on
know,
our
but
own.
okay, so we've moved a lot of ground here, so I want to get your thoughts on a couple of points
Are you
based on what
just
you said.
interrupting my rant?
Yes,
How
because
dare you? My
it's
rants
gone
are
on a
interesting.
while. They are
Son of a
interesting, and that's
bitch.
why I've let it go as far as it did. But I want to say, to your point on the Japan thing, they just elected a new government again, right? They
Mhm.
seem to always be doing that.
Yeah, they don't
That
like
is
their governments
very,
very long.
yeah, that is very pro,
Fiscal easing.
right.
Yep.
How does that play into the whole thesis of,
Oh, they're
the
gonna.
yen repatriation, right?
Well, they're going to try to ruin the yen, which is going to drive up bond prices even more and probably accelerate repatriation. The problem is they can't finance their own debt, right? Japan's always just been sitting on a big pile of treasuries that they got negative interest rates on or zero. And that's been great. Imagine having no debt payments. Well, now they're going to have debt payments for any bonds they issue. And so if they issue a whole shitload of bonds right now with their 10-year like above 2%, they've got to pay 2% on all that debt.
So they have to pay like 4.5,
So right
almost
now they have
5%
debt
of
to
their
GDP.
GDP.
Yeah, they have debt to GDP that's like 230% of their, their debt to
Yeah,
GDP is 230%. So, you know, now all of a sudden they would have to pay money on all that debt. That's very bad for them. So I
yeah.
don't think the
No, that's
whole
a good point.
Abenomics thing is going to work for very long.
Wow.
And the Bank of Japan is still pushing back against that. And ultimately they set monetary policy. So the Bank of Japan is now in kind of an adversarial position with the leadership of Japan, and
So they're going
generally
to just cave and do whatever, even if it hurts everybody, because that's kind of what they do.
yes, but I mean they can only do that to a point, right? Before they start to seriously devalue the yen in a way that it can no longer be recovered.
Okay. The other point I wanted to bring up about the discussion of Trump destroying, our global hegemony, is I saw an interesting thing today, and I really apologize because I can't remember who it was, but someone mentioned, and people have been talking about this for a while, that the freight demand in the U.S. is going up, and it seems like a lot of that demand is in the Rust Belt and in the Heartland, coming from a reindustrialization of sorts. My gut tells me if I had to pick, if I had to guess without any more information, it would be the AI build out because they need a lot of stainless steel containers and rafters and things like that. A lot of wire traces and a lot of metal fabrication work. But do you think that this supposed reemergence of freight from the Rust Belt and the Heartland is a durable thing and is any function at all of like Trump's policies or
Trump can make all the promises he wants about reinvigorating America's manufacturing base. But that's not I mean, I want to point out first that that's not an admirable goal. It's a step back. We were the world's manufacturing superpower after we geared up during the late stages of World War II, and we remained that well into the 70s, into the collapse of the USSR. And then we moved forward. We moved into a tech and financial based economy, a services based economy, which is that's the next step up. And we're kind of trying to get back on China's level where China is, because now we have to directly compete with them. But in order to do that, we have to step back from our current more advanced economy. Um, so I don't think it's a very good goal, first off. But then I mean, politicians love to do this. They love to promise projects that take 15, 20 years because they're only going to be in office for 4 or 8. And he's promising something.
Generals in the Department of Defense love the same thing.
Yeah, and
Drives
it's
me
and the
fucking
thing about it
crazy.
is, it's like, no, we have. I mean, how many new factories have been built since the beginning of Trump's administration? Does anyone know? Do we have a number on that? That's got to be something, but probably not very fucking many,
No,
and
I
definitely
think it was
not enough
probably
to
just
support.
increased orders to existing factories.
Yeah, and definitely not enough to support the manufacturing base, and the rails for just getting a factory online anywhere in the US, regardless of deregulation. You still have to deal with state EPAs, you have to deal with zoning and planning commissions, and this is all before you can even fucking break ground. You've got a 2 to 3 year lead time. Then you break ground, you've got another 5 years, you've got all the problems that come with construction, waste management, water management, um, getting the shit you need in a tariff environment at a price that your investors are willing to pay, and just, on and on. And then even at that point, you've got to find fucking employees. And we've got 4% unemployment. Who the fuck needs a job?
I know a few people.
Okay. Well, are those people going to work in factories?
No, I've already tried.
Okay. Well, then, it's just, I mean, 4% of the population unemployed is, I mean, you can chalk a significant chunk of that up to things like disability, mental illness. You can chalk it up to just fucking lazy people who don't want to work. You can chalk it up to people who are retired or don't give a shit, or people who are just independently wealthy. And then you really just don't have that many unemployed people. I mean, as far as the Fed's concerned, we're at full employment right now. We'd be at fairly full employment all the way up until like 5% unemployment. Then it starts to get nasty. But who's going to man all these factories? And we have a declining birth rate. I mean, I know we took away the Department of Education so we can make sure the next generation's extra fucking stupid, but that doesn't mean they're going to want to work in factories either. They just spent their entire life on a fucking tablet, and AI can't run the places. So what are we promising? What are we doing? It just seems like bullshit. Seems like a lot of bullshit.
Yeah, I think so. I did look up the stat for you guys. It said that since 2020, there's been approximately 50 new large-scale factory projects over 1 billion each that were announced. So there
Announced, but
is,
how many have been built?
Yeah, how many built and then how many died during that time? Yeah, I mean, I will
That's
say,
it's harder.
Yeah.
It's harder data to come by. We can try to find it later or something, but um, I guarantee you, not that fucking many, and definitely not enough to get us
I
on
mean,
par
just
with China's,
yeah,
25,000 factories in one city.
I mean, I will agree. As somebody who's actually perused the Alibaba marketplace many a time and actually purchased things from there and worked with people over there, can't anymore. Thanks, Trump. Um, but yeah, I will say they deliver a good product for a good price. Like, I hate to say it, everybody loves to kind of say like, oh, all this exporting to other countries, it's lower quality. Nobody knows what they're doing. That I can't speak to programming in India. I know where that a lot of that went. I have very little, a very small window into that world. But at least what's coming out of China, it's good shit. And I'd rather buy it from there for half the price than the shit I'm getting now from the US. That being said, yeah, I think without even looking up the numbers, probably it's existing manufacturers that are just getting more business and doing pretty well. I mean, the timelines just don't make sense to assume that there's been significant increase in like manufacturing capacity. It just takes too much time to build it.
yeah, that's what I was going to say. I mean, you figure any kind of large infrastructure investment for any business, it's not even something where even if you have one good year, you're going to be like, yeah, let's just, increase production capacity by 3 or 400%.
Including hyperscalers. It takes like 4 years to build 1 gigawatt of AI power.
Yeah.
Where are the GPUs? Show me the pictures of the unused GPUs stacked up in the warehouses. Somebody find those pictures. There's got to be some true American out there somewhere who can get us those pictures, because there are GPUs that are in a warehouse not plugged in to make the quarter because they have to keep the... Anyway. All right, Ron, keep us on task. Is this our first break?
Not quite yet. We're going to talk real quickly about earnings.
All right, what you got? Ron, you got your gun to your head. Which earnings are you listening to the entire earnings call?
Let's see. We've got a good amount this week, right? So
you have to pick one.
You listen to earnings calls?
Every once in a while.
I do sometimes.
Ugh.
You don't?
Never.
You don't ever want to just like be angry for no reason?
I mean, I just don't want to listen to lies when the numbers are published.
Yeah, but you get to listen to how people react to the lies.
No, it doesn't matter. People's opinions don't
It
matter.
matters a little bit.
No, the only thing that matters is the numbers. Is the numbers and the numbers over time.
Yeah, but what about the vibes about the numbers?
Bullshit.
Yeah, but nobody's investing on the numbers.
Well, they're idiots.
Well, are you saying everybody's an idiot?
Yes.
The views and opinions of
That's
Dork
a
do
wrap.
not necessarily
Thanks, guys.
reflect the views of GammaStrike. All the same, let's kind of still go into it. So this week, I do think we've got a lot of definitely companies that probably would reflect what's going on as far as the Americans' disposable income. So kicking that
Coinbase?
off, right? You've got DraftKings, right?
Wow, Ron's really running with this.
Yep. We got Coinbase.
I mean, I don't mean it in an insulting way. It's just most people are pretty stupid.
Robinhood. Yeah. And of course, we got fast food. You got Wendy's there. You got McDonald's, Coca-Cola. And I would be kind of curious too with Marriott is on there as well. So, and then kind of getting us back into more technology space, you got Cisco, Shopify, and then looks like Unity's on there as well this week. So
Spotify.
Yeah,
Spotify's a little different. They just kind of print money.
Is this the thing we get a silence when Ron's muted? I like muted Ron.
Yeah. Hey, you know what? Dork's off tonight. We are not replacing Dork.
Ron, I'm going to call our viewers stupid as much as I want.
No, Ron, you can call people stupid. Nobody's going to cancel that out. You can say it again if you want. You just said it. We're not going to scratch that.
Yeah, I already threw in the disclaimer, so we're all good.
But, someone needs to do it, and Ron is stepping up and filling Dork's deep, deep hole that he left here.
Well, Dork spends most of his time listening to us and thinking, I wish these guys were my dads. And,
Don't say that. You're gonna fuck him up.
And Ron's
actually, we can use this to figure out if he listens to this.
And that's going to confuse Dork.
It's going to confuse me. I don't have room in my life for more than one other or two other men. Now I have three men. How many men are my...
I mean, I'm guessing in Dork's dream it would be like a polyamorous husband.
But it's all men?
Yeah. Just triple dad.
Who does
Imagine
the
how
dishes?
much dad love he could get.
Wait, Dork does the dishes.
Dads. Huh?
Dork does the dishes. That's it. Because he's so many dads and he's trying to make them all happy. He does the dishes. He's the child that actually does the chores.
That's it.
All right. Well, I hope he listens to this. I want to see.
He won't.
But don't tell him we talked about it. We'll just see if he does listen to it.
Yeah.
If he actually.
Have you guys ever wanted to pronounce Moderna in the Italian way and call it Moderna?
Moderna.
Yeah. Italian would be like Moderna.
Every time I see a written.
Gabagool. That's pretty good, right, Kirk?
No.
Did I nail it?
Right. Fuck.
You're Persian. What do you know?
Cisco. No one's interesting this week. Who gives a shit about Robinhood? I'm interested in
Nobody.
Ferrari and Cisco. And
I will say I'm kind of interested, weirdly enough, in Datadog, just because that's like SaaS. It's like part of like the SaaS
like
bloodbath that is
security, like some security subscriber service.
Kraft Heinz might be an
It's like
interesting,
a bellwether.
yeah, an interesting bellwether. Agreed.
Coinbase will be interesting at post crypto tank.
But crypto is for everybody in 2026 of all years, because they need more bag holders, and they're
This is
running out. Of
all
people.
of these companies represent like 7% of the S&P. This is so uninteresting.
Yeah, this is a pretty light week. Applied
Birkenstock.
Materials might be interesting just as like an upstream provider to people like TSMC and folks, but I think they're going to look a lot like everybody else upstream of NVIDIA right now. Pretty good, because they're hiking prices in the face of insane demand. Otherwise, yeah, nothing here is really jumping out at me as like a must listen to. I'm not going to listen to an earnings this week. I'm going to go ahead and say that now.
All right. Well, I think this is a perfect point for us to cut to one of those commercials that I know you guys love so much. So let's hear it.
This is a new one?
No, this is one from last week. So sorry, guys.
It's okay. I can be disappointed twice.
Well, hey there, stranger. If you're enjoying this podcast, be sure to check us out on our socials, where you can hear the latest about Vol-Stars and GammaStrike. Check us out on X, Blue Sky, and Reddit.
All right, welcome back. Let's get into the calendar. So, Girk, first thing to talk about is today we had a few things drop because we're recording on a Monday instead of our usual Sunday.
We did.
I think the biggest thing that dropped was consumer inflation expectations, although we all know how I feel about that bullshit indicator, but it was somewhat muted.
Consumer inflation expectations?
Am I looking at the wrong week? Yeah. Monday, February 9th, consumer inflation expectations. Otherwise, we just had some auctions.
Yeah, those were a little bit lower. I don't even know who reports that. Is that New York Fed?
That is a great question. That'd be a great producer question to provide us the answer to. Yeah,
I'm working
New York
on it.
Fed. New York
Okay.
Fed.
You got it.
Thanks for nothing, Ron.
I know. I know we got some Fed speakers that did seem to affect intraday trading a little bit.
Jesus Christ, there were a lot of them. Waller, Moran, Bostic, and Moran again. He did a double header.
Yeah. He was really out there running his mouth. He had some great lines today. He said that AI is well. Let me actually.
This was my favorite quote of today. No, yeah, I'll let you say it. I want you to read it word for word.
I want the exact quote because it was one of the dumbest things I've ever heard.
Yes, agreed.
We
didn't coordinate on this, but yeah, go ahead.
AI is definitely impacting the economy, but it is hard to measure.
That is just so Fed, right? We are 100% certain that our theory is correct, but we have no evidence to support it. Yep. I read that and I immediately just started rage tweeting because what else am I supposed to do? I can't dictate.
He's also said some other great things, like he isn't worried that tariffs will impact the dollar's value. He doesn't think fiscal dominance will be an issue, and tells me it kind of is an issue because he's talking about it.
Yeah.
Because if fiscal dominance wasn't an issue, people would just never say anything about fiscal dominance.
Yeah. It's like, why did you bring that up? Yeah.
And then lastly, being a reserve currencies a currency is one of the best things in the world, which was just a big fucking nothing statement.
Cool.
Yeah.
What great, wonderful people that we have running the thing
Meanwhile,
that
the U.S. January budget deficit came in at $94 billion.
that is just so cool and great.
Yeah.
Yeah, we're still on track, for 2.1 trillion deficit this year?
Yep.
I think we have a deficit of like 660 billion so far in like four months, something like that. 4 fiscal months, which start in October. So super awesome. Okay, so tomorrow morning, we got a lot on deck for people who have puts for some reason. ADP employment change. Do you think there's going to be anything there? I mean, so we already have folks from the administration coming out on mainstream media downplaying what the quote unquote, kind of steady employment growth needs to be to maintain. Basically the idea is that, we're getting rid of so many people from our country that we don't need to actually grow employment numbers that much to maintain full employment because we are gutting the country, which seems like a self-defeating argument, but I guess everybody's just letting that go. So do we think ADP employment change might be notable, given that they might have seen some things about this?
Well, we had a what? It's a 3-day delay on the data.
I have no idea.
No.
Well, so are we getting it tomorrow or not?
The NFP data?
No. ADP.
Oh, ADP? Well, we have the weekly ADP data, right?
Yeah, that's what I'm talking about.
Yep.
Oh, yeah, we get that on time. That's just reported by ADP.
Yeah, but
Oh, okay.
you'd have to imagine that they have some color on those numbers. Because they're already downplaying in the news, like they've got people from the White House going around and saying, we don't need a lot of employment growth to maintain our employment levels because we're kicking so many people out of the country. I mean, if nobody has anything to say about it, we can just move on. I think personally, I think the unemployment numbers are so skewed and so off that I'm waiting for the quarterly consensus, the quarterly data that is delayed by like half a year. But we also have retail sales, we have employment cost, both benefits and wages quarter over quarter for quarter 4. We have export prices, import prices, retail sales, control group, and X auto. So all the details of retail sales. What else? We've got Redbook. Nobody gives a shit about that. That's somehow like always 5 to 7% a year, but somehow that's not inflationary. But then we also have stuff like business inventories and retail inventories, X autos, coming out for November. Is that still just like old data that hasn't quite worked its way through the system? Do we care about that?
No, I don't think so.
Okay, let me ask you this, Girk.
I don't think
what
it's
do you care
important.
about tomorrow?
Retail sales.
That's it. Okay.
Maybe
Not employment
NFIB.
costs?
It's quarter 4, right?
Yep.
No, not really. It's
All
probably
right.
gonna be like the same. Import, export prices, I guess. Although those are December, I think, so they're still old. Those haven't caught up yet.
Yeah, everything's December.
Yeah, I just don't
Or
care about
November.
I don't think the market's gonna react to any of the old data.
All right. Anything on Wednesday that catches your fancy? We got non-farm payrolls
Wednesday is
on Jan.
huge. Yeah, Wednesday they shifted non-farm payrolls from last Friday to Wednesday, so I'm assuming that Trump didn't like the numbers and they needed to be fixed.
Well, yeah, they had I've said this twice now. I mean, they're literally going on the news saying that they don't need to be high for it to be good. So I agree. There could be something there.
Yeah, and I don't think the economy heating up when people are worried about inflation is really the right way to go with this. So, doctoring the numbers in any way is probably going to lead to them shooting themselves in the foot. But, Trump did come out with his Tom Lee-like projection that by the end of his term, the Dow Jones will be at 100,000. And he's going to inflate us all the way there, I assume.
Oh, my God. It's Main Street's time. Yeah, what do we get, like 3 days of that before they went full into the market? They do know that, like, most voters don't own stocks, right? No?
No. Friday is somewhat important, too. We're going to get some of the new CPI data I think most of the expectations are that, month over month is going to be flat to hot. And core is going to be possibly a little hotter than last month, but year over year on core is going to continue to decline.
That's interesting because I've seen a lot of chatter about, folks talking about obviously the lag in housing, which is just this forever thing that's always coming but never arrives. But saying that like rents have dropped 1.6%, not for people who are already renting, just for people who switch their rents. People who are already renting, their rents are going up still. But I wonder, is this the month that the lag catches up? That the lag actually materializes? Or are we just going to get another? This is like the Supreme Court ruling on tariffs all over again every week, every month. It's just like it's coming any day now.
That feels like a good precursor to a stupid bet this week.
Ooh, it actually does. Yeah.
Right? Maybe we save that for later.
Yeah. So we have CPI on Friday. That's basically it. We got non-farm payrolls on Wednesday, and we got some shit like retail sales on Tuesday. I think that's about it. Otherwise, party on, Wayne. Party on, Garth. All right. Do we want to get into this? Is the part. See, this is the part that Dork does. This is the part I hand over to Dork, and he's not here. It's like my little puppy that I pet, and that I go to pet it, and it's not there.
Well,
it's all right. I can try to help. So I think because we got that producer Ron asshole, we got to play at least another commercial. So let's go ahead and do that.
All right.
Sorry, guys.
Let's just backload all the commercials at least.
We're at over an hour in, so it's clear you like Volstars, and for that, we're thankful. Could you do us a huge favor, though, and be sure to give this a like and subscribe if you haven't already? It really helps us to get the podcast out to others, so we appreciate it. Thank you.
All right, so we're going to get into audience questions, and I'll do my best to kind of read them aloud, and we'll try to answer it the best we can. So first one comes in from Blue Sky. How do short, medium, and long bonds react to their respective currency strength? Are we seeing the same thing in Japan as the US or other countries?
Well, I would let Girk take the reins on that. I have some thoughts, but I know that he spends a lot more time thinking about this than me.
It's
obviously complicated, so it's hard to like.
I wouldn't have necessarily wanted to answer this with the time that we have, but I'm trying to just think of how to like give a simple answer because it's wildly complex and it doesn't just have to do with any one single currency, but all currencies in relation to one another. So it gets very complex to talk about very quickly. But a strong currency is going to reduce inflation among domestically. It is going to reduce domestic inflation, and it's going to. And since most bond purchasing internationally is domestic, it's going to tighten yields up. I don't really think for the most part it's going to have too much of an effect on long-term yields unless the currency is significantly devalued or debased. It can have some effect on bringing short-term yields down the stronger a currency is. Like, when the dollar is strong, short-term yields are likely to stay, kind of pinned to the Fed rate because most of those instruments are used as cash or cash carry, right? And so their equivalency is based on currency strength, and yields on the short end will go up if there's a lot of volatility in a currency. The belly is where it gets weird and kind of complex because currencies can be up because of growth or currencies can be up because of monetary policy. And so you can have both like safe haven demand and risk on kind of going either way. And so that one's That one's a little harder. 10 years plus, it's credibility and fiscal stability. So, if you have a credible currency that is valued internationally at a fairly stable rate, or, currencies that are like pegged to the dollar, the pound, Swiss franc, euro, yen, things like that, where they have a very strong global market, that tends to support less volatility in long-term yields, which gives you kind of like a bull flattener, where your long end yields are a bit flatter. And we see that in the US right now with the 10, the 20, the 30, all relatively around the same rate. There's not a lot of variance between the three of them. They tend to move together. In weaker economies, or where their currencies have less international importance, less strength, less domestic demand, then you'll start to see the long end of the yield curve rise exponentially, and you get things like you have with like Turkey or Russia, where the long end of the Brazil, where the long end of the curve is really, really unstable and volatile. So, I mean, I think that's the easiest way I can explain it. It is extremely complex, though, and it starts to get there's a lot there's a lot of layers.
Yeah, they basically just asked us the question of like, how can I try to make you look stupid in 5 minutes trying to explain something that's just going to make like a bunch of people angry for a bunch of little reasons because you took a shortcut on something that is very important to them.
I
But
mean,
I
I
will
don't know. I
say,
don't. I don't hate the question. I don't mind giving the
no.
101 answer.
I will
It's just,
say, I think that's a pretty good answer in response to the depth of the question. And let's make it a conversation. So, take that answer, and if that's unsatisfactory, give us more questions in regards to that.
All right. We'll go to the next one, which is from Reddit. Since November 2025, we seem to be following similar price action, a top into a shop, that we did in the previous year, pre-Liberation Day, November 2024 to February 2025. If Liberation Day never happened, how do you think the market would have looked instead?
I I will say I think it would have looked a lot like it did right before that, but with less of a low. I mean, you think about like Liberation Day and that impact, it actually kind of looked a lot like this week where like things went down and they just went like immediately back up, right? It was over a little bit of a longer period of time, but it was kind of the exact same thing. It was just immediately buy the dip and rocket it back upwards. And I think that, if you look at the balance sheet of households, the balance sheet doesn't look terrible. And they just, I think, are looking to make sure that they don't get left behind by not leveraging enough. Everybody wants to make sure they have enough leverage to not get left behind. It's literally just global FOMO. It doesn't quite feel like 2021, I think, because it's less about just like retail and it's more of everybody. Everybody is trying to hedge against, potential future inflation. I think everybody's kind of lost. This is related to the metals and everything else. Everybody's just kind of losing confidence in what's going on here. And so a great place to put your money is in a global monopoly in that case. And that's what everybody did. Now the global monopolies are selling into them. So we'll see how that works out.
Yeah.
I mean, I think we were also. I kind of want to bring this up because it's something you bring up all the time, Jay Fresh. We were kind of at like a financial impasse as well. I mean, there's just not that much money being fucking added, and even the slow uptick in I don't want to call it money being added, but money being relieved in the system that we see with the Fed's balance sheet. Don't look at me like that.
I was gonna growl. I didn't know what to do other than growl.
I,
I'm just gonna snarl a little
I'm
bit.
gonna say that, like, we're really kind of at the limits of what people can continue to bid up for future speculation. So it's not that crazy to think that, if we look back to even, 2025, that we've not really, moved up that much from the peak of that year. And where we're trading now is, it's kind of near the limit of what the market can handle. And it's likely why we've been kind of, stuck here. There's really nowhere else to pack on leverage. There's, not a lot of, there's not a lot more money to invest. And so, it's just the creation of more money as that money comes in that's continuing to drive prices. But I think some of those shocks revealed that the system is, very fragile, obviously, and especially at these valuations. I mean, we had a 25% drawdown in a matter of days last year, which is significant. And I think a lot of the stops that have been pulled that give our system resiliency have already, like, those levers are already pulled. I think if that hadn't happened, there might have been more faith. Maybe we would have more continuous growth, but we've had a lot still. I mean, last year was still like 13%, which is overperforming.
Kind of add to that just in terms of how it looks from last year, because there are a lot of similarities. I'm looking at, the options, open interest, and leverage, comparing those two times. The biggest difference between this time this year and this time last year is that you kind of have this stagnating period after the big December OPEX expiration, where leverage and, open contracts and things are kind of flat, kind of, at a lower equilibrium, and everyone's just kind of waiting for that number to continue to trend up. Basically more money and, more portfolio allocation going into options. That hasn't really materialized, but it doesn't necessarily need to materialize yet at this point. It takes a couple months for these positions to kind of show up and that leverage to kind of show up. And so the big difference that I see between last year and this year is that put value, not necessarily put leverage, because put leverage is going down as people are less willing to sell far out of the money puts because they're scared. Put value and put delta is what is supporting the overall value of the market. Whereas at the beginning of last year, it was flat. Like, yes, the overall value was flat, and it was supported by flat call values and flat put values. Now you go to today and the open interest value is flat, but that's on declining call values and increasing put values. So from a trend perspective, we are still trending strongly up in the value of puts. That generally means people are buying more of them, right? If they're selling them, they tend to be very low value, very high leverage. At the same time, you think about how quickly the market bounced back last year. And one of the reasons that is so is because nobody's closing out their leverage, right? If everything drops and you happen to just lose control of volatility on a few day time span, then you're just basically exchanging value from calls to puts. But if nobody closes out, if everybody keeps their calls open, right? I mean, it's all just going to, and then you have retail come in and just buy the dip. It's all just going to rocket back right to where it was, where everybody had their positioning, right? Because you drop everything down at all this sold stuff and the market makers buy, and then the next day you just rip the other way. And I think a similar thing is happening now, right? It just happened this week where, we went down or last week, we went down and then we just rocketed back up, right back to where we were before. And now we're just kind of stagnating again because everybody has positions open. Nobody's closing anything. And I think that's the key, is that at this point, everybody's too afraid to get left behind. And so you're not going to see a durable decline that persists until somebody closes something. Somebody takes money off the table. So that's what I'm looking for. I'm looking for money to come off the table, and I haven't seen it yet. I see people getting more scared, but they're not ready to actually just sell and get out of equities. They're just repositioning within equities, and that's not going to cut it. If you want a durable downside, you need people to get the fuck out, and they're not getting out.
And I think to the question that they were asking specifically around Liberation Day, and I think, as much as whether or not it's true, I think there is a certain sentiment with most investors where they see Trump talk going on things, right? And so even though we do have this temporary dip, there's kind of that long term, just we're going to continue to rocket on up, right?
Well, but that was the other side. That was what Kirk was saying a minute ago, was that there's only so much money and there's only so much portfolio allocation that people can actually put towards equities. And we're already at historical highs in terms of equity portfolio allocation. Never seen before. More than .com, more than 2021. Like, we're at all-time highs. Since we started recording the data in like the 40s. Unfortunately, I don't have the data for 1929. That would be the only other time I would care to measure it, right? That's how high we are. And so you have this upper limit cap on it. The only way for the market to go up is for somebody to print more money from here, right? So we're literally stuck at 7,000, not necessarily because people are less bullish or people aren't willing to leverage more. They have nothing more to give. So, yeah. So that's the upside. The upside is historic overweight equities on a 100-year time scale. The downside is nobody's closing their leverage. So you get a lot of volatility on the downside that quickly corrects back up to the historical leverage on a, decade timescale, century timescale.
So that ties in perfectly. This question follows up the last one. Do you think, barring a Liberation Day 2.0 in 2026, do we follow that same path this year? Or has the environment changed too much with tariffs, inflation shifts, increased AI spending, etc.?
I have my thoughts, but Girk, I want you to take the first round. He wasn't listening.
No, I was. I think the environment hasn't changed that much, but I think there's a lot more geopolitical pressure, and I think there's a lot more macro factors now in play than there were a year ago. Obviously, I've thought for some time that the system's kind of getting tighter and tighter and having fewer and fewer fallback options. And so I would say that, while I think a Liberation Day 2.0 isn't really a thing that would happen anymore, since we've had several of them, right? We've had 1.5 and 2.0 and 2.8, and Trump's constantly threatening to raise tariffs on one of our trade partners or another when they dissatisfy him in one way, and the market's just not reacting to that anymore. They expect the taco trade, and so far, all of those trades and all of those actions have been withdrawn when the market reacts negatively to them. And so obviously, it's very important. It seems very important, at least, to Trump, that the market stays up. And so he will generally backtrack from any policy that the market finds or deems unfavorable. But we do have inflationary pressures that can't be avoided due to fiscal policy. We have increased AI spending, which is putting more pressure on the fiscal side of things, where the US's debt is already still very expensive. We're having fairly persistent issues with short-term cash financing. We're having issues with some issues with employment. I mean, last week definitely broke the narrative that employment's strong. NFP data can obviously come in and save that, but it's starting to look more moderate to declining. And then you start to get rate cuts, but not for good reasons. You're no longer getting rate cuts to promote growth. You're getting rate cuts to reinvigorate a potentially failing economy. And generally, when that happens, you're getting those rate cuts far later than they actually need to be realized. So I think there's just a whole constant. I mean, at all times in the market, there is a new and constant slew of risks that are playing out, and I don't think 2026 is going to be any different than that, and it's going to not be the same as 2025. Each one of these has to be approached with kind of like a fresh kind of set of ideas about how the year will play out. And so I think yeah, we could probably just float here for some time until either the narrative develops into something that people are willing to apply more leverage to, or the narrative starts to break down. And it seems to be breaking down, which is the case with all periods of euphoria throughout human history. So I don't think this one's any different.
Yeah, I will just add, in regards to what I just talked about that I saw in terms of, breaking down again, yeah, I don't see any reduction in leverage or anybody pulling back any exposure. But what I do see is that people are getting more downside exposure, I think, because they're getting more scared, but they're not willing to let it go. They just want to hedge. But that hedging is causing, these increased days of volatility where, yes, we're getting, it will return, right, to mean, but we get these wilder and wilder swings. And so, I think we will continue to see this larger volatility. Will we get a volatility event again, like in 2025, where it just kind of goes unstable and gets out of control and people can't get a handle on it for a few days? Maybe. I don't know. I mean, that's impossible to predict. Is it more likely? Sure. But at the same time, as Girk said, and I agree with that everybody's been fully Pavlov to buy the dip. Nothing ever happens. Everybody wants it to go up. Stop fighting it. Let it go up. Go all in. O'Doyle rules. Drive your car off the cliff. And so I kind of think if we were actually to get a Liberation Day 2.0 in 2026, we need a credit event. We need somebody to lose their shit and have to be forced to deleverage in size. And I don't know where that comes from. Certainly there's a lot of potentials, but for those to play out this year, it's hard to say, right? I mean, you've got a lot of people taking on a lot of leverage and a lot of debt for this AI build out, but they're trying to get runway where are their creditors going to ask for, a payout this year? I don't know. But you can look at now you've got all of the hyperscalers. They're not going to be buying back stock in the way that they used to be. So that's a headwind. They're going to be issuing debt, which is now taking up money from that would have gone nominally into other things, right? So you're basically diluting the market with this issuance, which can't be discounted. Then you also have folks like OpenAI, XAI/SpaceX, right? They merged because XAI is garbage. And, Anthropic and others who are all racing to IPO. And I think part of that is because they see the funding starting to dry up a little bit, right? And I think some of that started when Blue Owl pulled out of, I think it was a Michigan data center for OpenAI's big OpenAI and Oracle's big thing, right? Something about it spooked them. They said no more, and they've put money into like fucking every AI data center. So they pulled out of that one, and so I think that is a signal that money is starting to dry up, and people are starting to say, "Hey, private equity is saying, hey, I haven't gotten a return beyond my cash invested since like 2016. Where's my fucking return?" And so it's not a coincidence that all these companies are racing to IPO, and their IPOs are going to be valuations in the order of trillions of dollars. Like, this isn't nothing. And they're going to be competing with the valuations of existing companies. I mean, this is why people like SpaceX are already in open negotiations with like the S&P and other places to try and see if they could just IPO into the index, because they want that liquidity. They see that there is a shrinking next dollar to go into something, and they're trying to weasel their way in before the window closes. That's how I see a lot of desperation. I mean, that's probably my own bias, but I see it, and it's possibly true. And I don't think it should be completely discounted. So, but I think to see like a Liberation Day 2.0, you've got to see somebody eat shit.
Yeah. Now, being honest with our audience and you guys have always been, as far as I've known, fairly bearish, right? My question to you guys, though, outlining what you've already done, what would be the bull thesis that would really, outside of just floating along where we've been, what would be the technological advancement or some other type of news that would really kind of continue this bullish run?
The Fed's buying $500 billion worth of treasuries this year. And the banks are gobbling up all the AI debt currently. So yeah, some of the private equity folks are starting to bail out a little bit at the edges, but
yeah,
people are still issuing debt.
You think as they issue more and more debt, the amount of oversubscription to that debt is going to fall off?
Yeah, I mean, we talked about. I think the oversubscription to Google debt was
Here's the other
not
thing
a
I think
real
will
measure.
happen. I think
but
the yields on that debt and in those tranches is going to rise, and the value of the debt bought now is going to decline.
I don't disagree, but we were asked to give our bull case, and my bull case is Federal Reserve money go burr, which has been the bull case since 2009.
But it's not going burr. It's just going blip. I mean, it's.
I will fight you. I will fight.
$90 billion since November is fucking nothing. This is not like
Okay.
It's not like a
Hold
$7
on.
trillion influx or anything. It's just rollover. It's
Okay,
$500
Ron.
billion of rollover. Some of that leads to some slight money creation.
All right, Ron. Next week, Madison Square Garden, All Stars. Me versus Kirk.
All right.
3-hour debate on is the Fed printing money right now.
Winner gets to claim who is the real parent of Dork.
Yes.
That checks.
The winner gets to eat Dork's chili.
Yes. Which is a great segue for our final question. Will Dork ever release his chili recipe?
I don't know. I'm actually 78% sure that Dork is already dead. He's just died.
I think he's
alive. I'm assuming in the snow. He did just message on Discord like 30 minutes ago, but that's not proof of life. He's probably dead. So
I can say he has given me his sourdough cracker recipe. So he might give up the chili recipe. Who knows? So
what was the moisture content of that cracker?
That I can't tell you. I mean, do you mean like before you put it in the oven or after it comes out?
The oven? Anyway, I'm sorry. Yeah, I don't know. Here's the bigger question. Does Dork put beans in his chili?
No.
Then it's not. Then who gives a shit? Nobody will want to eat that.
It's just bolognese.
It's dog food.
Yeah.
I don't think he does. I could be incorrect. His chili may have beans. I
would think he would have beans in his chili, but we'll have to ask him.
We will.
I
right.
can't remember. I remember
Stupid bet.
discussing chili
Does
with him at
Dork
one
put
point.
beans in his chili? I don't either. I'm sure he's told me straight up, like, here's what I put in my chili. And
I'm sure he has. He's very direct about those things. But we do have a quick question first. Do we have any GammaStrike updates before we get to the stupid bets?
No.
Okay. All right. So with that, let's get to
Stupid bets. Stupid bets. Who's gonna win? Who's gonna lose?
that was
I
a bad
lost last
transition.
week.
My bad.
Yeah, that's okay. Well, no, it's not. But you'll do better next week. I'm sure you won't.
Yep.
So the stupid bet last week was Google Alphabet CapEx to income being, less. Will the CapEx come in for the quarter four being less than net income, equal to, or greater than? I chose equal to. Dork chose 1% or more than. He prices righted me out. And then Girk chose 80%, and I'm pretty sure Girk won. I think it was a little over 80. It was definitely under 100. I took a look on the day of. But they are projecting next year in 2026 that their CapEx will exceed their free cash flows, which all of the Meme 7 in aggregate will be doing so. So the Meme 7 is no longer a profitable endeavor. Interesting. Just food for thought.
Yeah.
What's the multiple on a non-profitable $20 trillion conglomeration?
Ooh, I have an answer for that. Tesla's
19 trillion?
current forward PE is 382x.
So we just apply that to all of them?
Yes.
And that's, yes, okay. That's what I thought you were getting at, yeah.
Mhm.
Sounds right to me.
Actually, if anything, Tesla's proven that the less profitable they become, the higher the multiple they trade at.
Yeah. Every year they get older, but they stay the same age. So what's our bet this week? That
I
Dork
would have bet on
dies?
Dork's chili.
I do kind of like that.
Do we just want to do just Dork put beans in chili? It's so sad because he's definitely told us he's just going to be offended that we don't remember.
Yeah. But we don't.
I don't remember. So
Yeah, me
I
either.
honestly, but part of me
I
wants
thought
to
about
say,
cheating on this stupid bet and going to my Discord
you
and
can't
just
search.
searching
You
Dork's
can't
chili
search.
recipe.
No.
So I know we always have to kind of have a little bit of a split, just whether it's beans or not beans. I think maybe we have to go. Is it more than one type of bean?
So we could do 0, 1, or 2.
Yeah.
Just because you want
Similar
to be
prices,
involved.
right?
I wasn't
Rules.
even going to give you a vote, but I guess you can participate.
It got to be the tiebreaker.
So 0, 1, or 2 beans. That does make it more interesting. I put 2 beans in my chili personally. I'm a huge fan of beans and chili.
Yeah. Definitely
I
pinto.
do. Yeah,
Black
pinto
beans.
and kid. No, not black. No, pinto and kidney.
Okay. I'm thinking he does 2+, but I could be mistaken.
I'm gonna go.
That'd be wild. That's too many beans.
I kind of want to go with 1 bean,
Okay.
but I don't want to leave Jay Fresh with no beans because he thought.
No, I'll take no beans because part of me feels like as my surrogate son, he's destined to let me down.
It is Nevada chili and not Texas chili, so
Yeah, nobody knows what that even means. Do they just put snow and dirt?
I don't know. I just
I think
assume
there's
Nevada
maybe
has
more peppers.
cows. I don't know. Definitely not more peppers. That'd be like New Mexico chili.
Oh yeah.
Yeah.
That would be heavier on peppers.
Yeah, I feel like Poblano's specifically there.
I'm wondering if there's a whole nother bet here on if it's like ground beef or brisket or sirloin or like what's the meat of the chili, you know?
When does it stop becoming a chili and start becoming a cassoulet?
I don't know.
I
Got
feel
me?
like if it's a chili, you have to have like ground beef, unless it's a white chili, and you could do ground turkey. But then that's a whole other like
Don't they use like
mental
steak
disorder.
and chili too, though?
I think some do.
Like well,
Well,
not like some kind of like stew meat, you know,
Yeah.
like chili verde, which is arguably the original chili, has pork shoulder in it or butt shoulder. I want to say shoulder.
no, it's definitely not a cassoulet. What about if you put duck in it?
But
it's
it
a
also doesn't
cassoulet.
have beans,
Yeah,
which is insulting to Texans. They didn't take over the Alamo for nothing.
yeah, we did.
I know.
I've lived in Texas for 11 years now, 12 years almost, and I still haven't gone over to the Alamo. Though I did go when I was a kid, and it sucked, and I don't want to go back.
There's no basement.
There's no basement in the Alamo. It's bullshit.
What a shame. So I'll go with, I think he's got 2 beans or more. Dirk thinks he's got maybe 1 bean. You think 0 beans?
I'm going 0 beans.
All right.
Accusing Dork of making bolognese.
No, dog food.
Yeah, Alpo.
Yeah. Chef Boyardee. Do you think he puts noodles in it?
Isn't no bean chili just for like hot dogs?
Yeah. Have you ever had was it Frontline chili? What is it called? It's like the Ohio chili.
My grandma made
Skyline chili.
Skyline.
Skyline is good.
I hate
that shit is disgusting.
I
mean,
like
it's good. It's good on a hot dog, but it's like it's good if you have one and then never eat it again, because like while you're eating it, it's good, and then you immediately regret it.
My mom is from the Midwest, and she is from somewhere in the Ohio River Valley, I'll say. And every once in a while, she's like, "Oh man, I want some 5-alarm chili." And do you know what that is?
I mean, it's just like it's just a can of.
It's like a can of chili dumped over pasta with cheddar cheese and onions on top.
So that's like Skyline. They have it.
Yeah, so that's like Skyline.
It is in fact Skyline. Yeah.
I think you can actually get pasta.
Skyline's like
Skyline.
shitty, like commercial version of that. They do have it like better locally.
It tastes good. I'm addicted to it.
But God,
I have been to Cincinnati,
that is the
Ohio,
hardest
and had
of her.
Skyline chili on a hot dog, and one is good. I enjoyed it, but I don't crave it.
When I'm in the area, I do crave it. I'm actually happy I introduced my family to it last time I was traveling, and while they all thought it was a little bit weird, especially the amount of cheese that you put on it, at the end they were all pretty happy with it. So.
Yeah, I mean,
my grandma made a killer chili, but it was easy. It was like tomatoes and ground beef and onion, and you cook all that shit up and then put a bunch of oregano in it.
Ooh,
delicious.
Yeah.
Oh, really? Just like no cumin or like chili powder?
Nope.
No basil?
Nope.
Whoa.
Just like a fuck ton of oregano, salt, and pepper.
Fresh?
Yeah.
Okay.
Fresh oregano. Well, when we could get it, not always.
Yeah.
It's kind of hard to find fresh oregano, even in New York, where there's a shitload of Italians.
Yeah.
I think the Mexican oregano, though, which is different. It's like got a stronger flavor. But it was simple. It was simple. Red kidney beans, of course.
Okay.
Yes. Oh God, thank you. Yes.
Dark red. It was actually very specific. Dark red kidney beans. Couldn't be the light red ones. Those are wrong.
Yes. No, I agree. It has to be dark red. I agree with that. All right, Ron. I think that's it. We put another one in the books. Dork is fired, and Ron's hired.
Until next week, when you guys fight it out.
So if he's not dead, you'll always be there ready to take over whenever, because you're desperate, and that's
Hey, you're not
That's
wrong.
nice. Yeah.
All right. With that, we'll lead us out. So thank you so much.
All right.
Thank you for listening to VolStars, a GammaStrike production. Please be sure to subscribe and check out our website at app.gammastrike.com.